Hello guys, welcome to the Trading Parrot. As we enter Liberation Day, we can see that the price of Bitcoin after me taking profits at 85,500 has only moved down barely 2%. In today's video, we're gonna focus on the potential for this price to go beyond that and try to assess what is the likelihood that we are not just going to hit 86 and see a rejection there? If there's further upside to 89, can we reclaim 90s? Or are we due to hit 81, produce a strong rejection, and then see lower lows? Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get these videos 1,000 likes? We've been crushing every single entry and exit from the market, staying in the profits. Some people were saying on Telegram this morning, what levels is Mariano looking for longs now that he pulled out? And people are intrigued where to re-enter. And Alex is saying here, Mariano will say go and pay for the newsletter service, which I completely disagree because I've been sharing every single entry and exit. My promise is to always get the calls first delivered via Patreon to all my spoiled members, but as soon as I get the message out, the message goes in a video with the explanation of why I'm doing what I'm doing publicly in every single video. That goes to Telegram, Instagram, and Twitter absolutely for free. The newsletter is just a convenience, and of course, they get it straight into the email, but you don't have to join it, you don't have to support the channel. Let's have a look at what is the sentiment at the moment against the Liberation Day. Is this something perceived as it's going to actually help the markets recover, or actually the opposite? And I'm just searching on Twitter for Liberation Day, which you might argue that is biased because it's owned by Elon Musk. But let's see what we find. At least I know these sources, or some of them. Ali Charts, I follow him for technical analysis, and he's saying that every single one of us today is glued to our screens. Sarah is saying that we're gonna lose all our money. Some people are making fun of Liberation Day. It's the day when you say goodbye to the money in your pocket. 8 hours ago, this tweet apparently from the White House, I'm not sure if this is official, but here we can see some tariffs incoming. People are complaining about Trump and the performance of assets relative to other administrations. Remember, expectations are that during an election year, once there is new administration in the House, it's expected to see assets to go higher. But so far, in these past 2 months, it has been the opposite. There's some funny memes all over the place. So far, I struggle, at least in my timeline. Let me know if this is biased, because it's my account. I don't know all these people that are tweeting, but somehow I can see a bias towards negativity. There are some bullish news coming in. For example, this one, Bitcoin sells at 109K all-time high, significantly below cycle tops. And then Bitcoin price struggling, but short-term holders might be setting for stage for 150K. The first article says that the 2020 Bitcoin buyers are still holding, according to Glassnode. Remember that on Friday, in 2 more days, we also have the unemployment rates. So I think that is also going to be very important, including Powell's speech. All right, let's go to the 4-hour time frame and let's see what's going on in here. Yesterday, we reclaimed the lost support. We ended up pinching below, and we're just literally going sideways around the area of 57, 56. There hasn't been really an ugly rejection. We've been below it, but in this current candle, we seem to be doing an attempt to stay above this level as support. The level that we need to defend at the moment is 84,900. If we do that, we are forming a larger cap and handle. Remember that in this area in here, we have some neckline as well with a target towards 85,800 that we couldn't fulfill 100%. We got rejected at 85,500. That rejection was just 2% or less than that. And we are still here insisting with the upside. we are pretty much at the same extension of this trend line, the resistance that 3 times in here rejected us, and that's why we are seeing a struggle to cross it. But there is a persistent that I'm actually celebrating in here. It's looking like this 85,500 could get broken. We still have 2 hours 42 minutes to get beyond that, and I will say that the actual resistance is that 85,800, the actual target from the previous neckline, because that was previously support in here. So I will say, even if we close now at 85,500, that is still not out of the woods. That is still a close right there, once again, against the same resistance. Let's go to the daily and let's see what's going on. One thing that I forgot to mention yesterday is we managed to dodge the bearish cross on the MACD. And that was mainly thanks to the move up, and at the moment is back to mouth open with some green candles in the histogram. But have we broken out on the daily? That's the main question. We lost the ascending channel for 1, 2, 3 days in a row, and today we are trying to reclaim the same channel, while at the same time we are challenging the RSI 50 to produce a breakout on the daily. Yesterday we closed at 49. There is just one more point to test the resistance at 50. If we go beyond that 50, then we have officially a breakout on the daily. Remember that we already had one in here, but it turned out into a fake out. So we'll have to see if this one can actually confirm it in a more sustainable way towards the target that the channel is implying. So something else that I forgot to do yesterday is to review the new levels of CPR this month. We were expecting to see pivots that were very narrow, and that means that we are within a squeeze. You can see that the level 1, 2, and 3 of the pivots are currently located at 85.8, 84.7, and 83.6, whereas support and resistance, the ones that are in the extreme of the full range that we can move according to the model, are at the moment from 55.8, which is crazy, to 111 on the top end. Those are the very extremes for this month of April, but let's look at the most humble targets. We got in here 92,800, that is the first resistance, and the first support is at 74.4, pretty much the same support that we have in March. It just moved a few dollars up, that's 74. Let's also mention that the forecast for March was to touch the first support, but we didn't do that. We should take that as a sign of strength. There's been 2 months in a row that we don't touch a resistance. We didn't go to 111. We didn't go to 93.8 in March. Let's see if this month we can go to 92.8. For that, we need to reclaim 85.788, which is the top pivot. If we turn it into support, we have a good chance to go to 92.8. The most recent leverage squeeze signal 2 had a drawdown of around 1.47, and at the moment is in profit. It has managed to do a run up of 3.6. We'll see how high it can get. If I get signals to sell, I will let you know on Twitter, Telegram, Instagram, and of course that will be included as well to my Patreon members. Since we closed March, we need to mention what happened in here. And as you can see, March, just like February, managed to hold the support on the monthly. So we still are not talking about a scenario similar to what we did in 2021, where we lost that support and we have a revenge rally into the lost support. At the moment, the RSI monthly is just pointing in the same direction as the support, so we are right there pending from a cliff. On the stochastic RSI monthly, you can see that after we have the bearish cross at the top end, now we are pointing to the bottom end. In 2021, we were doing the same thing, pointing to the bottom end, and thanks to the new all-time high of 69, we managed to make this dead cat bounce above the level of 20 before we officially enter into the area below 20, which is in the stochastic RSI monthly, the bear market. This is bear market, bear market, bear market, bear market. 4 of them never fail to flag that we are officially in a bear market. It's not a leading indicator, it's more like a confirmation with a lag. So where we are here, where we are pointing towards the direction of 20. And if you're wondering why am I showing you twice the stochastic RSI, that's because you've been missing my channel. We have a stochastic RSI forecast indicator that we can see how it could affect the closing price of the current month, which is April, to change the shape of the stochastic RSI. So let's say we close this month at a price of 85K, then it will look pretty much the same as the official stochastic RSI. There is no change. That's where we are right now. And what if we crash to 55K? Well, that wouldn't change it either. It will still point in the same direction. Let's bring the data window to see if numbers change significantly. Well, there is a little bit of a gap between 36 to 35, but there is not much difference. What if we go to 155 by the end of the month? Well, that puts the stochastic RSI, the blue line, at least pointing up, due for a bull cross at a range of around 41. So that incredible performance, of course, that's not what I'm forecasting for April, but you can see that if we had a move like that, a crazy move in April from 85 to 150, then we are not going to 20, or at least we are not going below 20. So the question is, what is the lowest price that we need to pump to so the blue line doesn't enter into 20? And I'm glad that you're asking that question. That's a really good one. Let's say we go to just 100K. Well, that saves the day already. That is putting the stochastic RSI pointing down and above 20. But that leaves us in the month of May with a big task, which is to continue an uptrend so that in the next month we can do some sort of bullish cross and then enter in bear market later. But here is the ugly truth, and this is past performance. This is not the last word. But in a topping year, after we go in the middle of the range with the stochastic RSI, within the topping year, right? Not just in any year in the cycle. It needs to be 2021, 2013, 2017. That topping year, if we enter this zone in here, after having done that, if we have a bear cross, wherever we have that bear cross, that leads or has led always into a bear market. That happened here, and it happened here because we enter the middle of the range, then we get the bear cross there, and right after that, bear market. In this case, we're having a very interesting situation. We enter the middle of the range, and we have the bear cross, but for the first time it's at 77. So that is the only caveat left, because in here it happened at 55, the bear cross. In here, the bear cross happened at 24 after being in the middle of the range in a topping year. We've been in the middle of the range in a topping year. In our bear cross is happening at 78. So that's the only thing we still have as a hopium to say, well, it wasn't the same, right? It was a little bit different. But big picture is that this is now pointing to the 20. And if we want to have another bull crossing here above 20, that is kind of the only thing around this area, to have that bull cross followed by another bear cross to sustain the rally for longer during 2025. Long-term holders have been buying up until we went into into the 88, and since then they are just going sideways with this correction, so they are holding. Long-term holders have had a bit of a distribution in here, just a small one that I wanted to mention, but we are still in the territory of accumulation because we are at a ratio of 56. That is below 1. Above 1 is when there is just more deposits than withdrawals. In this case, it's the opposite still. And yesterday, we also have some red in the Bitcoin spot ETF. We can see here a 93 in the negative, but that is after all these days in the positive. So I'm hoping that we don't form in here a head and shoulders in the total cumulative flow. We can do that very easily at the moment if we carry on, let's say for 1 week, if we push the cumulative flow back into 35,700, which is the low of 14th of March, then all this accumulation goes back to the previous reading. So pretty much we need to sell all of this amount in the red to complete a head and shoulders from 40,000 to 35. So that's 4K, and that could push the total cumulative from 35 to around 31. That could be the target if it plays out as a head and shoulders. We are still in fear. Let's go to the liquidation levels and let's see what we are currently doing. So price is still battling with my exit price. You can see in here, one attempt, second attempt. We just have another attempt. Bulls are trying to target the level 3 that we've been discussing. Let's look at this closer so the normalization of trading different can highlight what could be the target next that they're trying to hit. And that is precisely the leftover at 85.7, followed by the 86 level 3. But after they complete with 86,500, here is the challenge. This depression in here at the top of 3 and the beginning of 4, it's the big challenge at the moment to really get to 89. Notice that the trend direction strength at the moment is at -2, favoring a reversal down. We are in a critical resistance on the daily, and after the breakdown from this flag, we haven't fully fulfilled the 75K. So that is kind of now the heavy risk that people are seeing, right? Because if you extend the flag like this, right, this is our flag. What we are currently doing is giving a kiss goodbye, basically, a retest of the breakdown that has the risk to go all the way down to 74, 75. But at the same time, if bulls manage to break out in this area, the next upside is 92, and that is the next CPR level, and that takes all the 89, 90 liquidity that has been accumulated with the previous attempt. We can see that liquidity in the weekly time frame, the 89, we can see also the 86.5, and we can see the 81. So I will say that in the closest proximity of the price, what we need to focus our strategy is, first of all, the 81. That's on the lower end, but the highest two levels are 86, followed by 89. There is at the moment that 84 here formed there. Let's see if it overlaps with a fair value gap in just a second. Yesterday, the longs pulled out. I pull out with them. This kind of bottom at 51, and it started coming back into 57. So longs are slowly coming down, and we can also see that that ask liquidity that we have in the beginning when I took profits has now decreased to just 0.03. When I was exiting, it was at around 0.07, and I say, okay, that's enough for me, I'm exiting. Now it's at 0.03, and I have to admit that if we cross this neckline, we could see some additional upside, but we are still there, held by that resistance. Of course, that can change at any point. We continue to have more longs in risk of liquidation with 146K. That's not a huge number, but it's no longer the situation we have in the past 2 days where we have 600 and 300K of shorts at risk. And those were the ones that we hit by taking profits. Let's look at the order book on fire charts. And at the moment, we can see there is $74 million in ask liquidity at 91K. We also have some resistance at 88 and 89, but definitely 90.66 is where they have decided to put now price suppression levels, which is these levels that they keep moving since early March every time that the price moves as well. Let's see how it looks this in real time on Trading Light. And as you can see, there is support at 84,800 with almost 700 versus 543 resistance at 85.40. If things continue like this, and if they insist by holding this, they might get away with producing a breakout. But of course, these are 5-minute candles, and you can see that from 500 to 300 in the next 5 minutes, things can really change. As the price was coming down, they rug pulled these levels and then they put them back. This just gives us a perspective, but this is not really tradable in my opinion. We can also see that some levels in the 4-hour time frame that were placed as resistance, these 2, 3, 5 levels have been removed in the past 4 hours, and instead of that they placed just 500 at 85. That's the level that they want to suppress, but it's interesting that they remove so many levels and they place them in here. And I've seen that sometimes that happens when there is a bit more conviction towards the breakout. In the 4-hour, you can see 800 in the previous candle. That was responsible for pushing the price back into 85. And if we zoom in, we can see that they are right there with the price trying to get this to break out as well. We enter in our area of value, and I took profits in the green in here with net long shorts, but you can see that there was still halfway room for this to expand to the top of the range, which we left on the table. So now the decision is whether to enter in here or not. I think I'm gonna wait to see more data for a re-entry. If you decide to take the risk, we have in here still this fat fair value gap that we haven't taken, that ends at 86,900. Then we have the 87, and then this full vacuum all the way to 94, 95K. That is the area that if we could manage to break out beyond 89, it can be very quick move up, because there is no market structure, just like there isn't any market structure below us. And that's why I consider very risky to re-enter in here once again at 85, because what price could do is just take this and then decide that that's it, and then it can easily collapse very fast to the low end. And of course, this is a very risky setup, and the counterpart of that is that it could also give a lot of reward. If you enter in here and you get lucky that you break out above this trend line, that could be the beginning of a very fast move into 95, which is gonna bring all retail back to buy, and that could be a great setup as well. But my decision is still to continue monitoring the market and see. Nasdaq and S&P have a positive pre-market price relative to the closing price of yesterday. You can see it in here, but I don't think that is sufficient to convince me that Nasdaq is really going to have a great day just yet. We can have a revenge rally into resistance in here. If I change my mind during the day, I will let you know as well. Just make sure that you're following me using the links in the description for Telegram, Instagram, and Twitter. And guys, if you want to trade any of these setups, if you're planning to do something different, consider opening an account on OKX. By using the links in the description, you can grab yourself up to 60,000 in rewards and lower your fees when trading on OKX. If you want to stay out of KYC, you can do so by signing up on Bluffing. By using the link in the description, you can get 10% cashback. Remember, just applies to the first 50 users, so be quick. Thanks so much for supporting the channel by writing down a comment below, hitting the like, subscribing. I'll see you in the next one. Bye bye.